Opendoor is now officially selling homes at a loss. Shares of the company spiked last year when rival Zillow exited the iBuying market for houses. But now, Opendoor seems to be suffering the same fate as Zillow and Redfin. Opendoor shares have lost 75% of their value in 2022. That compares to losses of just over 70% for Zillow and Redfin shares. Corporate home flipping/online market making has turned out to be a bust for Wall Street, at least this time around. This video takes a closer look at how iBuying of single-family homes met with such disastrous results in the United States. What does this mean for the future of this type of business model? What does it mean for the future of Opendoor, Zillow and Redfin? What does it mean for the U.S. real estate market? What does this mean for new home development? What does this mean for the future of the economy? And, what does it mean for the future of the United States? But, before we get into that, please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. The U.S. real estate market is in decline and so are the fortunes of Opendoor. Today, Opendoor officially announced that it is selling its portfolio of U.S. single-family homes at a loss. This is the result of a fast-changing market, said Wall Street analyst Mike Delpreet in a research note. Real estate was cooled by rising mortgage rates and stock market uncertainty, Delpreet added. Those factors have combined to hurt home values, Delpreet continued. It appears that Opendoor bought its portfolio of single-family homes at the height of a historically hot market. Opendoor lost money on almost half of the houses that it sold in August. Opendoor doesn't necessarily have a crystal ball to see into the future with 100% accuracy, Delpreet added. A lot can change in a couple months, Delpreet was quick to note. This is exactly what happened to Zillow during its high-profile foray into the iBuying market for houses via Zillow offers. Zillow actually paid much higher premiums than Opendoor and OfferPad. And Zillow abruptly exited the market last year in an embarrassing and high-profile capitulation. Zillow terminated its iBuying having lost more than $1 billion in a little over 3 years. Up until this quarter, Opendoor had actually made a profit on all of the houses that it's bought and later sold. Average profit on Opendoor house flipping deals peaked at 12% earlier in 2022. But, this quarter, Opendoor lost money on almost half of its deals. Opendoor is now selling around 2,000 houses every month. The average sale price of Opendoor houses is $400,000. Analysts calculated that Opendoor would lose around $16 billion if it sold the remaining houses in its portfolio at a 2% loss. And Opendoor is speeding up its rate of transactions as the third quarter comes to a close. In fact, Opendoor offered buyers' agents a $3,500 commission bonus for each house bought from Opendoor. Opendoor also gave money directly to home buyers to buy down their mortgage rates. We predicted lower transaction volume in the third quarter guidance provided in its last earnings report, as well as longer hold times for inventory, said a spokesperson for Opendoor. We have moved quickly and decisively to prioritize inventory health and risk management, the spokesperson added in a written statement. I do not know why the company would try to accelerate sales when they're losing money on those sales, said Delpreet. They might be afraid that the market will decline further or that sales will slow during the winter months, Delpreet continued. Opendoor is also cutting asking prices for houses. And it is continuing to cut prices every week for houses that linger on the market. The first hypothesis is they wanted to book as much revenue as possible in the third quarter, Delpreet said. The second would be they think things are going to get worse, continued Delpreet. Better to lose a little money now than a lot of money later, Delpreet continued. But Delpreet does not believe that the current economic downturn represents existential threat to Opendoor. They're not going to run away, they've been building the company for years for just this moment, Delpreet was quick to add. This ungraceful market exit comes just as the Federal Reserve is aggressively raising interest rates. The Federal Reserve meets on September 20th and 21st to determine the next interest rate increase. Wall Street analysts expect an increase of 75 basis points. Federal Reserve Chairman Jerome Powell has repeatedly said that interest rate increases are necessary in order to reduce inflation. This comes amid layoff announcements from many companies. And the United States economy teeters on the brink of recession. Homebuilder sentiment in September fell another 3 points to 46. Nearly 25% of new home prices are discounted. Redfin CEO Glenn Kelman is predicting the biggest U.S. housing crash since the Great Recession. Sensing that home prices are in free fall, home buyers are now pulling back from the market. New home builder sentiment sunk for the 8th straight month. And the United States now teeters on the brink of recession. The average 30-year mortgage in the United States is now over 6%. Buyers just don't have the 40% extra money to put towards housing every month, Redfin chief economist Fairweather said. Mark Zondi, chief economist at Moody's Analytics, said, "With this backdrop, home prices will soon undergo a correction." Is the housing market crash of 2008 going to repeat itself? That's not what we're gonna have here, Zondi continued in an interview on CBS News. First-time buyers are locked out of the market, unable to afford rising mortgage rates, Zondi continued. Many of these real estate markets are seriously overpriced. San Jose, California is down 10%. Seattle is down 7%. San Francisco is down 7%. Los Angeles is down 4%. Denver is also down 4%. The CEO of Redfin has warned that his company is quickly selling off properties in its portfolio. Redfin stock is down over 75% in 2022. Boise, Idaho is 72% overvalued. Austin, Texas is 67% overvalued. Ogden, Utah is 64% overvalued. Las Vegas, Nevada is 61% overvalued. Atlanta, Georgia is 58% overvalued. Phoenix, Arizona is 57% overvalued. Provo, Utah is 57% overvalued. A $500,000 home in Boise, Idaho, may see prices fall between 10% to 15%, continued Zondi. Zondi said, "I predict that large price corrections in other once hot cities like Charlotte, Phoenix and Austin." The median listing price of a house in the United States peaked in June at $450,000. Tech layoffs are a primary reason why home prices in technology hubs fell 0.77% from June to July of this year. Over 32,000 people have been laid off from U.S. tech so far this year. Tech companies that boomed during the pandemic are seeing dramatically falling revenue. Tesla laid off 229 autopilot workers. Netflix cut 300 employees. Coinbase cut 18% of its workers. Robinhood cut 23% of its employees. But experts say that many tech employees are well positioned to find new jobs just weeks after being laid off. And as of June, 64% of tech CEOs say it's getting more difficult to hire the right talent. Despite the layoffs, many open positions remain unfilled. But, what do you think? Please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. Please share this video on social media. Thank you for watching.